Welcome back. Well, the Central Bank of Nigeria report shows that credit to the economy grew by 5% to 44.7 trillion naira in 5 months to May this year, driven by increased lending to the private sector. What implication does this have on the economy? Tajuddin Ibrahim is the head of research and strategy at Chapel Hill Denham, and he tells us about this. Hello, Tajuddin. Good morning.
Thank you for having me. Good morning.
Good to have you. Well, when we
say... Thank you for having me.
Yeah, you're welcome. So when we say credit to the economy has grown, what implication does that have? What does it mean in a layman's word?
Well, the one thing that we have to recognize is what it implies increased availability of credit to the private sector, either from the deposit money banks or from the microfinance banks or from other sources, that are recognized by the regulator as, lending, businesses. So what happened in the first 5 months of this year is that we have seen an increase in credit flows to the economy, and that was driven by increase in the flow of credit from the deposit money banks to individuals, to businesses. At the same time, we saw increases in the flow of credit from the microfinance banks to small businesses and also to individuals. So what this implies is that we have the first five months of this year, where the banking sector was largely speaking supporting economic growth. Because when you see credit improves in any economy, what it naturally does is to lead to increased demand for goods and services by businesses and also by individuals. So in summary, the banking sector played a very supportive role in economic recovery in this regard, on the back of increased availability of credit to the economy. And we have to also bear in mind that the increase in credit was not just in size, it is also in the number of people or individuals that have access to credit, that also increased. So the volume and the value, were the two drivers in this case, and it signals supporting, a possible recovery of the economy in the second quarter of this year. The number for the month of June has not been published, but my view is that, that trend continued into, June, and it implies that the second quarter of this year was good for the economy, as will be indicated in the GDP number that will be published by the MBS at some point. So broadly speaking, the development positive.
Okay, so Tajuddin, like you said, one of the impact or implication, of this increased credit is supposed to be more money. So they were supposed to have seen increase in demand of goods and services. Would you really say that in this first 5 months of the year, there's been increase in demand for goods and services?
Yes, I would say that because it depends on what indicators people are looking at. If we on the research side, for instance, we see a lot of things, and we have some strong views on some of these indicators. If we take a look at the telecommunications sector, for instance, what we notice is that in the first 5 months, they experienced increase in demand for for airtime. They experienced also increase in demand for data, And they also experienced increase in the number of transactions that people were carrying out on their mobile money platform. The same thing applies to some food businesses. In the first 5 months, we believe that businesses like cement businesses experienced increase in volume. Businesses like flour milling businesses also witnessed an increase in their sales volumes. So when you see credit flows improve in an economy, you will see some of these key sectors of such an economy improving in terms of sales volumes and also in terms of value addition to the entire economy as a whole. What we are seeing currently in the cement industry, for instance, speaks to an increase in the availability of homes and houses. We may not be there yet, but we are seeing some uptick in terms of volumes.
In spite of the high interest rate, lending to the private sector, increased. Don't you think this would increase the risk of default?
Okay, so the rate of default is a function of a number of economic indicators. And what we have seen so far, based on what the CBN has published, is that the non-performing loan ratio is moving downwards, which means that, while we are seeing credit flows improve, we are seeing a deceleration in the NPL ratio. And so the combination of these two factors, is positive. And if it is sustained over the next couple of quarters, then the economy should be a lot more robust from the credit flow perspective. But in terms of higher interest rates, I think the NPL ratio has also demonstrated that, or let me say, has proved to us that higher interest rates has not really resulted in an increase in the rate of default. And bear in mind also what people use the loans that they take from banks for. It is what really matters in many cases. Some people have borrowed, and such borrowings have been channeled to businesses, and those businesses are making money, and those businesses are profitable. When you borrow and channel the borrowing to such a business, what you would not be defaulting. Where there's a problem is when you borrow beyond your capacity and also beyond your ability to repay over time. That is when there is a problem. And for me, I think so far the banking sector is not seeing a material damage in that regard, because it is a
all right, Tajudeen, I think, like you mentioned, the inflation figure just got out. We just got it. And perhaps part of the impact of this more money to the private sector. Inflation is down 17.75, and all other sub-indices also declined. Would you say this is part of the benefit of, like you said, more businesses have opened and we have more supply?
So it is partly reflective of that. We have more supply, to be honest, but that inflation number should be read in the context of the high base effect that we had last year. Nevertheless, we should all bear in mind that we have more businesses that have reopened post the lockdown and the restrictions that were put in place last year. And also, we have begun to see increase in the production of goods, particularly those in the food space. So you would expect harvest to improve, and also you would expect the availability of more food products in the market over time to also improve as we see an increase in harvest. So that speaks to supply.
All right, Tajudeen,
and the CBN is...
Okay, just a minute, Tajudeen. We need to take a quick break. So you just do hold your thoughts. When we come back from the break, we'll continue this conversation. You tell us your thoughts about inflation and some other issues. So we'll take a short break now. We'll be back in just a moment. Just stay with us. It's Business Morning on Channels Television. You're welcome back. Well, we still have Tajuddin with us talking about the inflation figures that are just out. Inflation is down 17.75%, and all sub-indices have also declined. And we had Tajuddin reacting to that figure just before we took that break. Hello, Tajuddin. Could you finish up your thoughts on that?
Yes. So I said earlier that we have, the lower inflation number, largely because of the low base effect. And we also have to bear in mind that we have increase in the availability of, goods and services, because most businesses have returned to, normalcy in terms of the hours of operation and also in terms of the volume of output. So we are seeing increase in supply. So that is also, the factor that is partly supporting the moderation that we have seen so far in inflation. And in terms of financing, the CBN is, doing its best to support the farmers, by ensuring that they provide credits to them that could lift their production, that could lift their output and support increased flows of food items to the economy. And when you have such an increase in supplies, what you will most likely see is a downward moderation in the rate of increases in prices. Prices at some point may moderate for some products, but they may not moderate for some products. So for those that we are not seeing moderation in prices, at least we will see a deceleration in the rate of the increases in their prices. Those are my views.
Well, thank you so much, Tajuddin, for joining us this morning. And incidentally, you now were the first guest to react to the inflation figures that have just been released by the NBS this morning. Thank you so much, and do enjoy the rest of your weekend. Tajuddin Ibrahim, the head of research and strategy at Chapel Hill Denham. Thank you so much.